Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Obie Strickler, and Jake Lott from Grown Rogue. Grown Rogue trades on the CSE, or the Canadian Securities Exchange, under the symbol GRIN, and it also trades on the OTC under GRUSF. The company is currently trading at 23.5 cents with about 171 million shares outstanding, or about a $40 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Great to have Obie back. Obie, we haven't seen you for about 11 months. I am pretty sure you've been busy in that time frame away from us. So it's great to have you here. Great to sort of get an update. But before we dive into the update, you've got a presentation here. It'd be great for especially the newcomers just to sort of learn what Grown Rogue's all about.
Yeah. And Trevor and Paul, thanks again for having us. And for those that joined last time, welcome back. Excited to do an update. And for new attendees, welcome to Grown Rogue. As they said, I'm Obie Strickler, co-founder and CEO of Grown Rogue. Grown Rogue's story is actually pretty simple. Let me move the slide here. Oh, there it goes. We're a cultivator in very competitive markets. We went public in 2018. Started building the real business in 2017, got a little bit distracted into a bunch of different kind of categories and, different product types and, trying to figure out who we were for the first couple of years. Realized pretty quickly, I think a lot faster than many of the companies in the space have kind of, as just trying to be, all things to all people, that cultivation is our passion. It's our sweet spot. And we think we're some of the best in the world at creating high quality, low cost cannabis. And that's really what our sole focus is on. We take genetics, we take cost control, we're super disciplined. And we've done this in some of the most competitive environments in the US. Oregon and Michigan are our two primary states. I'll get to some of the updates from our last call as we've done some expansion. But very price competitive, but we're profitable in both of those states. We're one of the few companies in the public sector that is free cash flow positive. I think we were one of two last year. And we've just built this really strong business that's focused on customer, it's on brand, it's on quality, it's on, ensuring that, our customers ultimately, who are our biggest, clients and shareholders and whatnot, are getting product that they can rely upon, that they enjoy consuming. And it's just been a really, really good approach for Grown Rogue. So this slide kind of talks about the mission. We're really focused on like a win now, win later. We're very well prepared for, what's coming to the US, which is the whole export model. But we haven't built our business to be dependent upon that. The next big catalyst in cannabis is going to be federal deregulation, which we're all excited for. We're all waiting for. We're optimistic. But we knew in the beginning that you did not want to build a business that was dependent upon regulatory change, just because the political environment is so sort of difficult to predict. I talked earlier, kind of in the very beginning, about the difference. Super battle tested. I mean, Oregon, as everyone knows, is one of the most competitive markets in the US, if not the world. And we were early in this market, and we understand just how to function in a very effective manner. We're a cultivator, again, as said. We do about 30,000 pounds a year between indoor and outdoor. Most of our business is in the indoor category. As I said earlier, the win later strategy is really around some of the export potential in our outdoor product, which has a really high reputation in the region that we're based, which is in Southern Oregon. Super capital efficient. We were on a Twitter Spaces a couple weeks ago. We got talked about, return on invested capital. We think we're some of the best in the US at doing that. I think we're a top 10 overall flower wholesaler in the Michigan market. We're a top 3 or 4 indoor flower producer in that market. And we spent less than $4 million in capital to build the infrastructure and the facility that we operate there. And then our financial health kind of speaks for itself. I mean, 5 straight quarters of positive free cash flow. 13 straight quarters of positive adjusted EBITDA. You know, we don't just talk the talk. We actually deliver the results that I think matter to shareholders and investors. We love flower because we're passionate about it, but it's also the biggest segment of every market. You know, there's a bunch of different product categories from edibles to pre-rolls, concentrates, you know, across the stack. But flower continues to dominate in most markets, well over 50% of, you know, what's available and what consumers. So very happy to be in that segment. And it continues to, you know, create real good value for the company. You know, something around just Grown Rogue's unique proposition. We're a craft producer. You know, this kind of slide talks about the different kind of categories and the cultivation components. You know, we don't want to be the biggest. And for a long time, I was like, oh, everyone wants to see the biggest company. Like, we want a product that consumers are excited about. And we don't want to be Budweiser. We don't want to be Coors. Like, we want to be the company that has that kind of ingenuity and that brand appeal. And that's sizing facilities properly. Like, a lot of companies have gotten in trouble because they overbuild for a facility and they expect to take too much market share. And the consumer is very fickle. And so you have to be very knowledgeable around their change in habits, what their product types that they're looking for. And too much of something can sometimes be a negative, as a lot of the big MSOs and, you know, even in the Canadian LPs are figuring out as they try and compete with these more nimble kind of craft producers. This just gives kind of a timeline, kind of a more of a summary of everything we just went through, and I'll kind of browse through that one. This goes to kind of the, you know, our execution of what we've done, you know, and kind of just the progression there with Golden Harvest. And what Michigan really did for us was prove that we can transport our model. You know, we had perfected it in Oregon. Michigan showed that we could transfer our SOPs and just kind of our approach and our systems and establish a really strong business in a new market. And from this, we're taking that, and we'll get to some of the updates in a bit, like with our, you know, deal with Vireo Health, Goodness Growth, and now we're expanding that into new opportunities that are available across the U.S. Well, I'll come back to this one because that's more of an update. You know, we talked about sun-grown, like, you know, Northern California, Southern Oregon have been providing, you know, cannabis across the U.S. and since forever. And so the location here, and, you know, I have a background in mining. You know, mining deposits are only in certain areas. And Southern Oregon is one of those areas that has climatic conditions that are pristine for producing a really high, low-cost cannabis product. You know, you can't grow the product we grow here in Nebraska outdoors. You can do an indoor there, but not an outdoor. And so we think there's going to be a strong competitive advantage longer term with that geographic location that we have. Just some production numbers there as we think about scale and kind of, you know, building the business as it relates to outdoor. And really the point of this one is, you know, we're prepared to scale quickly to a much bigger outdoor production company. We have the infrastructure, we have the space, we have the, you know, the leased land, the drying capabilities. So well prepared to scale fast as regulatory shifts occur. This slide's super important. I can't stress enough that not all products are the same. Like, people confuse cannabis as a commodity. And I worked in the mining sector again. So like, copper's copper, you know, it's not like, oh, my copper is better than your copper. Like flower is not a commodity. There's different qualities of it. There's different terpene profiles. There's different potencies. And so that's the input of everything we do. And it's a huge part of our production planning. I mean, our teams sit down every couple of weeks from grow to sales to post-harvest to myself, and we go through what our genetic plan looks like for the next 2, 4, 6 months to ensure that we're continuing to bring the best stuff. There's a series of characteristics that you can see on the slide around what we prioritize. And going back to the customer, like, flower's a little bit like fashion, constantly changing. And you find a strain you really like, the customers are really happy. Guess what? In 6 months, they're tired of it. They want something new. And so you're constantly puts you on the edge to continue to drive innovation and new products into the market, and really establishing that tastemaker component. Brand strategy for us is simple. We're getting a little bit more sophisticated, and maybe I'll talk to that in terms of an update in a little bit. But we're not, you know, we don't put up billboards, and our focus is really on the consumer and the retail level. You know, how do we talk to our customers as quickly as possible? A lot of word of mouth. And that really goes through quality product. You know, so many companies struggled with building a brand before they had a product pipeline. And we did a little bit of that in the beginning, but then we quickly realized, like, it doesn't matter how good your brand and your packaging is. If the product inside, if it's not good, no one's going to buy it again. So focus on the product, build the brand off of that. And it's one of the things we've been working on over the last year that's seen some, real strong improvements. I'll come back to the slide. You can see some of the new packaging we're doing. That's pretty exciting. Team's super strong. I mean, the same team we've had, but, we're not as, and I think it's been a crystallization for me over the last probably even just a couple of weeks. Like, our team doesn't have the fancy MBAs or, we're not from Harvard. But what we do is we understand our industry and we understand our products. And I think that's in much shorter demand than some of these financial engineers you see at some of the bigger organizations that really don't understand what their customers are looking for. And so we got a smart team, I think one of the best teams in the industry, but we're passionate about our product. We care about what's happening. And it's, created really, really strong success for us. Capitalization table. I mean, we've had a nice run on the stock over the last, year. I think we're up quite a bit. Still not where we want to be in terms of overall, market cap and value, but definitely excited around the continued awareness that our company's driving and out to the public, and then obviously being rewarded by stock price appreciation. Maybe I think we'll start getting to some of the updates here. And so that was kind of just, for the new folks, the broad brush of who Grown Rogue is. I think some of the strongest things, and I'll talk now about the updates since we last spoke. I'll go back a few slides. And I was actually going to present back in May or end of April, as we were hoping to get this deal with the strategic advisor agreement with Goodness Growth signed and announced. So we pushed this in, presentation I'm doing today a little bit, just because this, deals always take a little bit longer. But this is like Grown Rogue's coming out party. And so we knew as we, figured out who we were and established our profitability margins in our core markets, that we now needed to expand the business. And so Goodness was kind of our first approach against that. And it's a really capital light, like we've invested almost no capital. We're putting our human capital against the project, obviously with our team and some of the systems we're going to put in. But it's a fantastic deal for us. Capital light, 2 new markets, one of which just got 2 adult use, which is Maryland. And that's a really, really big market. Early, revenue and numbers coming out of that state are very, very strong. And then Minnesota is just going to be a beast. And our partner there, Goodness Growth, holds 1 of 2 licenses. And so the pole position they're sitting in, and just the opportunity inside of that for significant improvements in terms of, quality of product, revenue, profitability is super strong. And it's going great so far. Like, it was one of the things that concerned me is, cool, we built this great business in these 2 markets. We're effective. Our team's humming. Can we expand? And I couldn't be more proud of what we do. Like, within a very short time frame, completely changing how, their cultivation components function. Like, increasing the key performance indicators we look at, like yields, A to B ratio. And by that, I mean A flower versus B flower, which more A flower, the better. Lowering their cost of goods significantly. And so it's just been really great to watch our team embrace the opportunity, go into these new states and be able to deliver and put our SOPs into place very quickly and see the results start to flow through. We have a profit share arrangement with them. That's kind of our compensation. It's one of the things I really liked about it. We only get paid if we make improvements. And so it really put the onus on Grown Rogue to deliver, fantastic results. So, if we're not successful, we get nothing. And you can see from some of the early numbers is, even before we really started to see a lot of our full completion roll through Goodness's apparatus, like starting to record some nice bottom line improvements. That's just going to help with, the overall cash position of the organization. But Goodness is a solution we'll look at in the future, because this is not the only company that's going to have operational challenges where they need assistance. And a company like Grown Rogue to come in and provide, just like excellence. I mean, that's the shortest way to describe it. So this is a big thing that we've done that we're pretty excited about, and is a material update since we talked a little under a year ago. Other big thing we've done in the last year is we've started developing our own proprietary internal genetics. And what we're starting to do now is you see kind of the existing Grown Rogue kind of branding. It's nice, it's clean, it's a little bit more what I call corporate branding, and a lot of the consumers are really looking for more of the hype and just a little bit more artistry into it. And you'll see up in the upper left, it's two of the proprietary genetics we launched in proprietary strain bags, and the response has been tremendous. So we do about 1,000 pounds a month in Michigan. I think we rolled out maybe 50 to 100 pounds of the first batch of like 4 different strains, all pre-sold, all pre-packed, and sold it at a massive premium to our standard pricing inside the market. And so the response for kind of this reputation we've built and this brand loyalty we've built with an exciting new product that no one else can get in a bag that gets people excited and kind of catches your eye has been very, very well received. And not only from the quality of the product, but the quickness at which they purchase, the reordering rates we've seen. It's been pretty exciting to kind of watch best-in-class product with what we believe is best-in-class packaging and branding kind of merge together, to further kind of align us with our customer base. And then this gets into our performance, speaks for itself. Like, between this year and last year, and we were doing well last year. Big increase in revenue, up 30% quarter or year over year. EBITDA was up 60%, which I love to see, right? So we're driving more efficiency into the business as our EBITDA improves faster than our revenue numbers. Percentage went up. That's really the telltale there. Seeing a little bit of an increase in pricing. A little bit of that comes from the scale that we've achieved, especially in Michigan as we continue to build out last year. Just overall continued improvements, and we will close Q3 Monday, the end of July, and we won't see as big a jump from year over year just because it's quarter to quarter movement, but still continue to see strong performance, and just the business continues to operate very, very well in our core markets now, with Goodness starting to participate. And then I think everyone probably saw the news that we raised some more cash recently, what we thought were very good terms for the company. Affects our balance sheet a little bit, taking on some debt, but it's very friendly with regard to the convertible structure that we put in place. And I can tell you that money was not raised to sit on the balance sheet. Like, there's a purpose for that we'll be announcing soon. That'll look as we look to do the next level of expansion for the organization into our next market. And that's kind of update for the new people, and then kind of the what we've been up to the last year.
Fantastic. Appreciate it, Obie. Why don't we talk a little bit about the financing? So it's convertible debenture. I think I just saw that the first tranche is closed. Can you give us a better bit of color? You guys looking for an acquisition? You're looking for some form of organic growth, facilities? What can you tell us about use of proceeds?
Yeah, we raised that money for a very specific purpose. It's not finalized yet, but it's well on its way, and it'll put us into a new market. I would call it less M&A, more strategic expansion into a limited license market. Mm-hmm. That's a very attractive one in the US, and it just continues our, one of the things with the compression in the cannabis markets right now is there's assets that are available for people that, have the know-how, mm-hmm. have the trust of investors. Like, no one can raise cash right now. So for mm-hmm. Grown Rogue to get that type of raise in this market, which is one of our bigger raises, while simultaneously we had an equity deal we turned down, and we had a straight debt deal that we turned down because we didn't like the terms, but mm-hmm. and we actually turned money away in the convertible. Like, we had more interest than what we took, mm-hmm. but it's going to be used for a very specific purpose, which I hope we'll be able to announce in the next 30 days, and we're working through docs and things like that. Mm-hmm. But knock on wood, it doesn't blow up, but like mm-hmm. it's looking very promising. Yeah. And it's going to be a big deal for the company.
Gotcha. So you just answered one of the questions that just came in. The question is it too late to get involved in the to be able to take advantage of the debenture deal? Is there any available still?
No, it's fully closed.
It's over.
I made there'll be a second tranche that's probably going to close in the next 2 weeks. The Mindset Capital, who led the deal with their friends and kind of put it all together, he's forming a new fund. And so we saved $1 million for him. So we'll probably take $1 million once he kind of gets the paperwork set up and some of the banking stuff. But the round's fully subscribed and filled.
And maybe, I mean, talk to that a little bit. Like, it is tough to raise money for any company right now, let alone cannabis, which is so out of favor. How did you manage to get the interest of, I call it this money, but what kind of investors are we talking about here?
It's people that believe in who we are long term. And so a number of the investors were the same ones that participated in our December deal, which we raised more for a little bit of just balance sheet cushion. Again, we thought it was great terms. We raised a 20-cent conversion, which we're in the money now, but I think we were trading at 12 cents when we did that deal. And so it was quite a premium. And so we really liked those terms. And it's a new investor I've been talking to for a little bit who just, we have a very unique story. And if you believe in our story, it's hard to argue against the logic of what we're proposing around our kind of approach. Our history backs that up, right? It's not like we've got a quarter or two of, good results. We've got years of good results. We continue to do the things we say we're going to do. And perception's changing around. There's so much distress in some of the limited license big companies because they can't compete. And, Grown Rogue's shown we can compete, and the industry's changing towards, from a promotional type of approach where it's all about what I'm going to do next year and, how great we're going to be versus, well, can you show it now? And what we're saying is, here's what we have done and it works. And we would like to take that model and put it into a new market. And it's a more attractive market than we're in. And it's just an easy story to tell. And so, people that believe in cannabis long term, and, Paul, to some of you and Trevor's stuff earlier, saying we're starting to attract investors who are not just cannabis centric. They like the industry, but they're like, gosh, Grown Rogue performs. Their market cap's really good for what they're doing. They're in a high growth industry. There could be a good opportunity here. So,
yeah. No, I mean, you said so many different things that I want to highlight. I mean, you are one of the very few companies out there, especially publicly listed companies, that are making money and real money, like cash flow. So that sets you apart. I agree. I think you guys have delivered on what you said you would deliver, certainly from the last time we've spoken. But I want to touch on a little bit more what the other thing you were saying here, like the industry trends. I mean, it's pretty plain to see that there's a lot of commotion in the industry. A lot of the big players that had a lot of money are in big trouble. There's consolidation, there's reorganizations, there's everything. And you guys are able to, do as well as you did in that environment. But I got to believe that, I mean, consolidation and the sort of the chaos within the industry is only going to benefit you guys as more of it gets rationalized, right? If you're losing competitors because they can't compete, that's going to give you more strength. If there's assets out there that you can buy on the cheap, that's going to allow you to sort of perform your magic on more and more assets. Maybe talk about what you see in the industry right now.
There's a tremendous amount of distress. It's a great question. We have more opportunity than bandwidth right now. Like, we just got pitched another thing that is actually pretty exciting. It's in a market proximal to us. It's in Nevada. We're taking a look at it, but we're really busy. And that's not going to stop. You're having companies go out of business who can't cut it. We're seeing some of that interest is coming from the lenders, right? The people that control, these assets through their debt deals. And so there's going to be a tremendous amount of that. Like, we've, another big lender that said, Obie, we love what you guys did with Goodness. We love that structure. When you're ready to talk to me about a couple of markets that we're operating in that have similar problems, like, let me know. Like, we're open to the discussion. We're open to doing something similar. And I think the change in sentiment lately has been what's in short supply in our industry is operational excellence. And that's what Grown Rogue does really, really good. And, we just continue to push that forward. And there's not going to be a lack of opportunities in front of us. The thing for us to be is very disciplined, patient, and when we see the right thing, go after it very, very aggressively, which is what we did with Goodness, what we're doing on that other deal we just talked about. We'll be aggressive when the time's right, but we're just disciplined and patient as well.
And you talked about bandwidth. How do you improve your bandwidth if you can at all? I mean, this is obviously, it sounds like there's people that you need. I mean, are they out there? Do you have the resources you need to sort of increase your bandwidth?
Yeah, I'm on a pretty aggressive hunting talent acquisition process right now, in a number of different areas, mostly in our cultivation side, like building that bench. But there's plenty of cultivation people out there. What we've really realized, and what's really crystallized to me, or even just the last couple of weeks, was, there's people that know how to grow product, but do they understand our ethos and our culture? And if we just hire anyone, we'll end up just like every other company. And so ensuring that we get the right talent who has the right focus and morals and ethics and goals that the organization has, and what's made us successful in our current markets. So definitely on the hunt. We need to build that out. But again, like, our team has tremendous just capacity, and we love what we do. And the time we put in and the effort, and we're able to promote from within a lot. It's one of the things that really became clear. Like, I was thinking about, like, for example, I need to hire a national cultivation director, and my thought was, okay, I'm going to go find a horticultural expert who has systems and process and organization, and that's the role you want for that position, because it's a lot of organization. And I realized, holy crap, Obie, if you do that, guess what? You're going to build a business that's the emphasis. That's where the cultivation will end up. It doesn't matter how much you try and focus on genetics and quality and customer, that individual is going to drive you into, a systems and process company. Guess what? That doesn't work. That's what it's important, don't get me wrong, but that's what all the big companies have done. They put a non-cannabis person in charge that's driven a culture in a way that doesn't really matter. And so we actually are going to promote from within and put someone that has all the cannabis knowledge, super great, has built our Oregon business, has spun up what we're doing in Minnesota just fantastically. Not college educated. He's not as organized as you want, but guess what? I can support that. I can get assistance to support that. What he has is culture, genetics, passion. And that's the ethos we want our organization to have, because that's what's made us successful in really competitive markets. That's what the customer can feel. And, we're just, could be wrong, but we're going to keep pushing what's made us successful so far and just try and push that into as many places as we can.
Yeah. I'm hearing more and more people talk grit, like the determination and grit. That seems to be such a common denominator among successful companies. And I think that's what you're describing here, is just the ability to get out there and make shit happen. Pardon my French.
We call it the scrappy operator.
Absolutely. Yeah. I like that. But do you, if we look at sort of your current bandwidth, like try to give us a sense of how much could you take on right now with sort of the current resources? Do you feel you still have more you can tack on with what you have, or do you have to go out there and find those people and train them and get what you need, or what can you tell us?
We just took down 2 new states. We're essentially running cultivation in both of those markets. Granted, we don't have as much responsibility for sales. They're vertically integrated, so they have some retail arm. So the lift's not quite as high. The state we're going to take down is going to be more like Michigan, so it'll be a much bigger lift. That's probably, unless there's something really intriguing, that's probably what we're going to do this year. We're going to add 3 markets. But I think we're going to absorb that pretty quick. And so we'll be looking at probably going from, we'll now be in 5, probably 6 and 7 next year. Probably 2 more is our goal. We want to be in 10 to 12 markets. That's kind of where we think our sweet spot is, doing, $100, $150 million a year of revenue. That's kind of where we see this organization going over the next 2 to 3 years. and we need a little bit of capital to do that, right? It's not free to go into these markets.
Sure.
We're generating a fair amount. But like, that's where we see ourselves going. And we'll be able to staff and grow the company from a talent base to satisfy that.
Gotcha. I want to remind everybody, I should have asked you guys earlier, but if you've got questions you'd like me to ask Obie, just use the chat function and I'll ask the questions. I do have a couple questions that came in here. Might as well ask them now, but it says for full year 2024, how much revenue do you think you will receive from the Goodness deal? And maybe describe what the upside is on the Goodness deal.
Yeah, it's hard to predict because there's so much just not uncertainty, but predicting how their business is ultimately going to function is difficult. But Jake, what do we got in the model for? And I think we're conservative in that. I think we're thinking like $100,000 a month, maybe. Yeah, going to 150, something like that. So call it $2 million. We think is realistic there.
Okay, wow. And as you said earlier, pretty high margins off that revenue.
Yeah, I mean, we got some costs with our team and whatnot, but the biggest savings there is zero CapEx, right? Yep. It's essentially a operating only
service contract almost. Yeah. Yep. Gotcha.
Yep.
Gotcha.
And there's a future with Goodness. Like Goodness is a good group. We really like the leadership. Like Kyle, their founder, fantastic. Amber, who's the CEO of Minnesota, just like really good people. And who knows? There could be a bigger partnership in the future with them.
Gotcha. So the other question that kind of came in was, it sounds like a royalty deal of some kind. You guys get sort of the upside of what you can squeeze out of it, so you capture a good portion of that upside. All right.
Yep, that's exactly right.
Okay, perfect. Okay, well, and I think you touched on it just earlier as well before the question came in, but can investors expect similar deals in the future? You guys are looking for deals like this with other enterprises, right?
I think you'll see us approach opportunistic assets where we think we can, with our deployment of capital, we can get into them for more capital intensive, like maybe building a little bit out, but things that we have more control over. And I think you'll also see deals like this. The biggest challenge in a deal like this is not our ability to execute. It's just the complexity of integrating cultures and ensuring that that's effective and, you get the right buy-in and things like that. It's not simple. It always seems simple on paper. And so this will be a good test of, can we achieve that? So far, so good. But we could come out of this realizing, God, the partnerships like that where, we don't have as much control as we'd like, or just more difficult to develop. And so, but I don't know exactly the way we will be expanding. What I can tell you is we like that structure. We like our kind of Michigan and what the new state structure will be. But we know we have to build this business into something bigger than it is. And it's for focus for us.
So Obie, clearly we're seeing success in how you're operating the business. Things are going well. You're raising a little bit of money. But what's the challenges you're facing? What sort of keeps you up at night right now?
I sleep pretty good, so not a lot. It's the day-to-day stuff. Like there's always a fire to put out. It's just part of running the business. I'll be honest, not a lot. Like the talent thing, definitely. Like that's why I'm like putting so much energy and resources towards, finding and acquiring better talent. But our business it's been running so well for like probably the better part of a year in Oregon and Michigan. Like we just stabilized it. Revenue or pricing come up a little bit. The Goodness deal got done. And so, that was a little stressful in the year, hoping that would get completed. I'm sure I'll have some stress with the new asset because, you've taken people's cash and you have now expectations and obligations and, timelines we need to deliver. So there'll be a little angst around that, but it's right in our wheelhouse. We're not taking on anything that we're like, oh, we've never done that before. And so there's not a whole lot that's making me super concerned with regard to pitfalls or snakes in the grass that are waiting for us. We're very comfortable with who we are and where we're going.
I think last time we spoke was about 11 or 12 months ago, and I remember in that conversation you talked about some weakness in pricing that the market was very competitive at that point. Maybe give us some ideas of trends or what you're seeing now in the marketplace for the actual product. What's pricing look like right now?
It's definitely come up a little bit in both states. Kind of from what we call the lows as you go through these big kind of macro cycles of pricing.
Mm-hmm.
I guess it's kind of material. For us, it doesn't seem material because we've seen so much volatility, but like we're probably up 20% in both of our markets in terms of pricing.
Okay.
Which all drops to the bottom line.
Yeah.
It's going to help with revenues. Outdoor was up a lot this year. Last year, outdoor was terrible. Like it was super low price. Like
I remember that. Yeah.
You could almost not even give it away. Indoor was carrying the whole business. This year we had a much better harvest, and pricing was up by almost 100%, and so that's been a big boost to kind of just a business at large. But it's I guess the biggest thing for our business is we have no supply. Like we have like less than a week's worth of inventory in both states.
Wow.
And
okay.
We're selling it as fast as we make it. My sales director was just laughing the other day. He's like, Obie, you've always told us, let's be like Apple and have 2 days of inventory.
Yeah.
Well, there you go. And so like, awesome.
Yeah.
And so it's pricing and demand are up pretty strong.
Yeah. I mean, so talking about outdoor, I've got a question in regards to climate change. Obviously, we're seeing more and more volatility in climate. How do you protect yourself against swings in the climate? And does this product, I mean, is there concern with what you have to deal with around climate issues, whether it's water, whether it's all sorts of things that we hear about right now?
Biggest thing for us, and you hit it, is water. The good thing for us is even at our scale, we're still pretty small as it comes to total canopy versus like the pear farmers in our region who, if like worst case, we have a drought year and we get, water until X time, we can truck it. It's expensive, but it's manageable, right? You can access water. Where, if you got a 100-acre pear farm, like you're not trucking in water to keep that thing going. It's just a loss. I don't think the temperature changes we're seeing in some of the climatic effects is really going to have like a long material impact in kind of our timeline for, Grown Rogue and kind of the outdoor. It might move a little bit, but like we're on the kind of the northern tip of that triangle. And so it can move up a little bit and we'll kind of stay in the zone. Water's the biggest thing. And so, you got to source farms that have good water rights. But that's, a little bit that's farming. There's risk with farm. But we're as well prepared as anyone to kind of manage through that and, making sure the right storage and just, access to the water in case we see kind of drought conditions that allow us to be as successful as possible.
Yeah. And I mean, you've got a mix of indoor and outdoor. So, I mean, it's not like you're fully dependent on one or the other. At least you have a blend and a little bit of sort of safety in that.
Indoor really drives the majority of our business.
It does. Yeah. Okay. Gotcha. Gotcha.
Yep.
It sounds like there's a number of things going for you guys right now. You guys are busy with a bunch of other sort of projects and potential add-ons to the business. But as investors on the outside right now and looking in, what do you think makes the most sense for us to pay attention to? What sort of metrics or catalysts should we really be watching out for?
For Grown Rogue or globally?
Grown Rogue.
Yeah. Just continue watching our financial growth, paying attention to the goodness deal and how, that's being recorded. And are we seeing positivity from that? Because it's a low capital intense, but it is sucking our team's time and energy. And should we be putting that somewhere else? Stay tuned for the deal. It's going to be coming up here soon. But we're still a great buy. People that were buying back when we were 8 to 10 cents a year ago are probably pretty happy. And we said the same thing then. I still think it's true. Liquidity is going up, value is going up. But, with what's on our plate, we could be exiting 2024 at like a $20 million EBITDA run rate. 25. It could be a significant improvement. We'll probably do 7 to 8, 9 this year, right? But I think with the goodness deal and this new thing, like exiting 24, we could be on, like a double what we are. And
Wow.
I mean, what is that, a 2x that we're trading at? It's like a 40, I mean, it's a 40 million Canadian. That's a US number. So like our multiple is still pretty low. And I mean, again, a million things go wrong, and I hate being like, I'm just not like someone that's like, oh, there's no risk, but like we've survived in the most in-hospital conditions possible, and we're still making a little bit of money. Like there's so many companies out there still in the sector that are like, you're in a pretty good market and you can't make money. Like it's not getting any better. Like prices aren't going up in New York or New Jersey. Like they're going down. Like our markets might have some price appreciation as they kind of settle and whatnot.
You've been through the hard part.
And we expect more hard parts to come.
Sure,
like, we're ready for it. And that's why the disciplines come into, like I think we have, probably the most money we've ever had in the balance sheet. And my team comes in and asks for things still, and the answer is still no. It's not like, oh yeah, sure, we can afford it. It's like those same disciplines have to keep, it's like, no, finance that truck. Like we're not paying for it. Like it's just, and that ethos just permeates our entire culture of how we think about our cash and, how we maintain what we built. So.
Yeah, no, good to hear for sure. You did touch on this earlier. You mentioned you're starting to see different types of investors. I mean, you are one of very few companies we follow in the cannabis space that's actually bucking the trend, right? You guys are going up. You guys are making money. There's a whole bunch of well-known names that are going down, losing a lot of money. You'd think that those cannabis investors are seeing the light and saying, okay, these are the kind of guys that we want to talk to. But maybe talk a bit about what kind of investor are you talking to? Who's picking up the phone and saying, hey, Obie, tell me more about your business?
There's definitely still more of a cannabis centric focus in terms of who's reaching out and talking to us. But a year ago they were still all the big MSO groupthink. And there's still a lot of that, right? Because the smarter ones are realizing what they're calling like kind of a small ball strategy. They're kind of getting aligned with, just the approach of some of the organizations that operate more like us. But remember, and some people are smart enough to hedge. So like, okay, cool. I still believe in the big kind of, where all the value was. And I'll hedge a little bit with maybe a company like Grown Rogue. But a lot of them are still like, wait a second, you're telling me that everything I thought and all my investment is wrong. That's a hard thing for people to get through. But we're starting to see outreach from, like for you guys, for instance, you like first noticed us a year ago, like you guys, I think we're the only cannabis. There's one other cannabis company kind of in your kind of network and who you care about, but like we're starting to attract just investors that aren't all like, even like the lead on the last raise. Like, I don't think he's invested in cannabis at all. Like he's like an insurance guy. Right. And he's like I like the terms. I like the whole, I get a little bit of a coupon and I have some upside. But he's like, it's a good company. It's making money. Like I believe in cannabis, but we're starting to get some of those folks that are not just like, it's not your traditional, like, bankers and, your cannabis funds, like
real investors. I call it real investors, not trendy investors. It's real investors. Yeah. Okay.
Yep. Yeah. Like one of the funds that came in, most of their fund is in uranium. And, he's now got a small cannabis fund because he likes the industry. He sees opportunities, a lot of similarities, but he's a real investor. He didn't just be like, oh, I'm going to take advantage of the cannabis thing and just, try and pick some coupons here. Like they're real investors that are thoughtful. That's exactly right.
Perfect. Well, this is great. It's always fun to catch up, especially when we've seen good success and somebody followed through on what they said. Obie, is there any key takeaway or any key message you want to make sure everybody walks away with today?
Yeah, I just do your due diligence, invest in people and function rather than the flash. Right. I think that's a really important in cannabis. There's so many like fancy stories about the next best widget and the promise of what's going to come. If you like cannabis and are looking to invest in this space, like invest in companies that have some level of performance. Because there's a lot of distress and failure coming. And so that'd be my biggest thing. And of course, Grown Rogue's a great business. The more investors and liquidity we can get, the better. But we're not the only organization out there that's doing good things. But yeah, that's probably the biggest thing is don't get caught up in the promotional noise that is so easy to like just get excited about.
No, I appreciate that. No, I agree with you 100%. We've been speaking with Obie Strickler, CEO of Grown Rogue. Symbol again is GRIN on the CSE. Obie, great to catch up and certainly look forward to catching up in the future. And one more time, congratulations on a spectacular year. And you've made a lot of shareholders and a lot of our network happy. So appreciate it.
Awesome. Yeah, thanks for having me, and for everyone that attended. Thank you so much for taking the time out of your days to listen. And if you got any questions, reach out. Like, we're happy to connect, myself or Jake, and Trevor and Paul. Just can't thank you enough for your support and taking the time to have us on the show again. So
appreciate it. Bye for now.
All right.